Hello, everyone. And if this is your first time joining me, welcome to my weekend market analysis. It's a great pleasure to have you here with me this evening. So, in today's session, we are going to be revisiting the gold market dynamic with the intent of sharing with you what I am looking at ahead of the new week. So last week, gold went full throttle again, pushing to test another record high, as you can see on my screen here, around the $3,357 ish. Now, this strong and bullish move was mostly driven by a weaker US dollar, uncertainty around tariff announcements, and growing fears of a global recession. But as we approach the long holiday and weekend, many traders started closing in their position to secure profits, causing price to pull back a little bit into the 3,285 zone before settling down around the 3,320 zone. Now, that pullback has left us with a pretty interesting technical setup going into the new week. So, in this video, as always, we will be breaking down the charts together and look at what opportunities both buyers and sellers might be looking at, especially now with traders anticipating Wednesday's S&P Global Economic Report. And of course, there is a good chance the market will get more reactive as fears around a global economic slowdown continue to build. But before we proceed, it is important to mention at this juncture that everything I share here is simply my personal take based on experience and what I see on the chart. This is not financial advice. Always do your own due diligence and speak with a licensed financial advisor before risking your money in the market. So, with that said, let's get into the chart and see what gold has in store for us this week. Okay, jumping into the 4 hours time frame, right off the bat, we can see that price is sitting in overbought territory, which is definitely something to keep in mind. Not exactly the best place to go in blindly with buy orders. In fact, it is a good spot to stay cautious, especially if you are thinking about chasing buys at this level. So, what I did here was to take into account the character of price action since the beginning of the month of March. Um, with the intent of identifying a structural detail that can help us understand how market participants are thinking within this specified space of time. And if you do that appropriately, you will see here that since the month of March, price action had consistently found higher highs and higher lows. And if you mark out the pivot correctly, you will see that we have a couple of ascending trend line giving us a structure that looks like an ascending channel. So if you look at this structure closely, you will see we have the resistant line of the ascending channel right here. Then if we go down a little bit, you can see we have the support line of the ascending channel. Though we saw price break down the support line right here at the beginning of this month, but by the end of last week, I think a couple of weeks ago, stroke last week, we saw price climb back within the ascending channel and later on broke out of the resistant line of the ascending channel during last week's trading session to emphasize the strength of the buyers at this point. So, Heading into the new week and considering the fact that price is above the ascending channel and of course within uncharted territory, what are the things that we are looking at this week? So zooming into the current structure, that is the last 48 hours of trading activity, this was what I was able to come up with. As price sits above the resistant line of the ascending channel, we can see price has been confined within the $3,359 area. That is the highest level price action has been. And then the 3,285, that is the support line of this um, consolidation phase you see here. So, and this support line here, interestingly, sits above, or let me say, within the resistance line of the ascending channel, and immediately price tested the trend line and the support line. Look at what we saw here, an hammer candle, which theoretically tells us that buyers are still strong in this market. So, with this information taken, how do we intend to navigate this area this week? Of course, you know how we treat our ascending trend lines in this community. As long as price remains above them, we will continue to look out for patterns and structures that support buying ideas. And since price tested the trend line, as you can see here, followed with an hammer candle, I will continue to look out for buying ideas and will not consider selling except on a long term if price breaks down, retest that trend line and that support line. Now, to help me navigate this market, I have my key level for next week right around the 3,320. So I'm considering buying right away above the structure. If price does not come down here, I just want to place a buy anywhere around here to continue the momentum. Now, to make things a little bit easier and considering the uncharted territory we are in right now, I think it's reasonable that we scale down to a much more lower time frame where we can identify a simple trading setup that can guide our trading activities at least for the first half of next week. And to do that, I will be scaling down into the 1 hour time frame. And on the 1 hour time frame, this was what I was able to come up with. As you can see, the key level remains very much intact around the 3,320. Price remains above the ascending trend line we marked out on the 4 hours time frame. And the new development you'll see here is this beautiful descending trend line after price tested that all-time record high at the 3,357 ish. Now, look at how beautifully that trend line lines up with the key level at the 3,320. So, at this juncture, and based on the current structure here, I want to maintain a bullish bias. So, breakout retest of structure, it appears we have a breakout already. Placing a buy right away to continue that uptrend move. And if price goes ahead to break out of that record high area, we will be adding more buy positions. However, if it so happens that the beginning of the week witnesses some selling pressure, maybe as a result of continued profit taking activities, and selling pressure persists below the descending trend line and the 3,320, I will be entering a short term sell position where, as soon as price get close to that ascending trend line, we move all stop losses accordingly, secure the position while we wait patiently to see how price reacts to this trend line. If price breaks down, retests that trend line, that will confirm that sellers are getting stronger and, of course, welcome more selling ideas. But if it happens that sellers find it difficult to break down that trend line and instead we begin to notice buy pressure, and if we are lucky, price action evolves into a reversal pattern, let's say a double bottom structure, inverse head and shoulder pattern, or a falling wedge, we mark out the neckline and, of course, buy the breakout retest of the neckline. So that is basically how I'm going to be navigating the current market dynamic next week. But trust me, I will be with you right in the comment section of this video to give you an update of what I will be doing after monitoring how market participants react to this key level at the 3,320 during the early hours of the new week. So there you have it, my in-depth look at the XAUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.